over the short term, I think investors can read too much into quarterly reports, getting stuck up in details and numbers over the short term. Similar to Duolingo, Hims and Hers is at a stage of platform building, and so looking too much at the numbers and taking them at face value, this will lead you astray, and this will lead you to missing the actual value creation for these early stage platform companies. Yes, their subscription growth has slowed down. Yes, their revenues have deaccelerated. Yes, the company is in the middle of legal disputes. And yes, I still see them becoming one of the biggest and most meaningful companies in the world. And this earnings call and these results just gave me a lot more clarity on that. So in this video, I'll explain why. This report lacked a lot of things. It lacked the revenue guidance that a lot of investors were expecting. It lacked the transparency on the Novo Nordisk situation. It lacked transparency on the FDA investigation. But what it did not lack was a laser-sharp, possessed focus on the end consumer and on bringing democratized access to proactive healthcare to the masses. Therefore, I think that this earnings result is a great example and shows you just how much the company is building for the future. As an investor, you only have an edge if you're able to track processes of value creation and have a long time horizon to watch them expanding and partake in that value creation. Today, I think a great example of your edge as an investor is C Limited. A miss on earnings per share on an otherwise great earnings report has sent the stock down massively. They're still growing double digits. They are still market leaders. They're still investing in their future. The whole point is owning the company and taking part of their value creation over the next 10, 15 to 20 years. But it defeats the purpose if you sell out at any inconvenience and any sign of the company prioritizing long-term sustainable growth and investment in their platform over short-term margins and profits. That's when you should get scared, when they prioritize short-term margins and revenue growth over building a sustainable, long-term, durable platform that is set up to capture a lot of the market. If they stop investing, if they stop seizing the opportunity and expanding the market, that is when you should get scared, not when they down prioritize short-term growth. Well, the very same thing is the case for Hims and Hers. As we can see right here, they're category leaders in the observable market. Most of the value in the observable market accrues to Hims and Hers, so they're category leaders. They're growing by double digits with revenue of 2025 of 59%. They're investing heavily into their future, bringing 3 new offerings onto the platform in this quarter alone. And still, we see this company being fundamentally misunderstood. In this quarter, as we can see here, they dropped 3 new verticals on their platform with testosterone support, menopause, and in my opinion, the most important one of them all, bringing everything that they offer on the platform together, labs. And all these offerings, they can see them eclipsing 100 million in annual revenue in the future, right? And when they do this, when they reach this high revenue growth, they just use that money and plow it into more future growth levers, right? Plow it into more verticals, plow it into more offerings on the platform. The same thing that we are seeing all these other successful companies and platforms doing, increasing the amount of offerings on the platform. For Hims and Hers, it is fundamentally about them democratizing access to proactive healthcare at scale. And as they do that, they have to increase their offerings on their platform. As they do that, they have to keep investing into their offerings, making their value proposition for customers more valuable, right? Obviously, that's the case for Hims and Hers, as it is with any platform company. Well, as I started this video saying, this company has slowed down in their growth acceleration, right? And we can see that. This is a slowdown in its revenue growth. Its revenue growth is deaccelerating, right? But this is a very tough comp situation, right? This is a very tough situation to compare because last year we saw massive revenue boosting offerings in terms of this branded semaglutide on their platform, but they're still growing without that. They're still managing to grow their revenues without that. 59% year on year, right? And a low percentage, as they said in the earnings call, a low percentage of their revenues comes from GLP-1s, right? And as I mentioned in the beginning of this video, yes, their subscriber growth is also deaccelerating and slowing down, but this is also the same situation. we had a massive growth explosion because of the branded semaglutide that they offered on their platform. They're not doing that anymore, and they're still managing to grow in terms of their subscribers. Another thing that I'm really impressed by is their ability to grow their average monthly revenue per subscriber. They are growing this on a year-on-year basis, right? But if you dial in and you focus on a quarter-to-quarter basis, you don't see it increasing too much. It's $83 per average subscriber now. And if you focus and just maniacally zoom in on a quarter-to-quarter basis, these short-term swings might lead you to selling. But if you take a long-term approach, this fundamentally just changes the whole picture, right? Their revenue is growing immensely. Their revenue is growing by a lot, 59% year on year. Their total subscribers, yeah, it's the same thing. They aren't growing by the same amount that they used to, but they're still growing their subscriber base. And as we'll get into later, they're still growing the most important part of their subscriber base. Taking a look at their monthly revenue per average subscriber, when you base it on a per year basis, this is just beautiful to look at. This is incredible growth, and it's incredible that they're able to do this without the branded semaglutide on their platform. This tells me a couple of things. It tells me that this company is much more than a GLP-1 company. It tells me that this company is much more than a company that will die on the heels of one offering. So we're seeing tough comparisons, as what they're being compared to is a period of branded semaglutide being a huge growth driver on the platform, and they're still growing without this in subscribers, in revenues, in average revenue per user, right? And this is because they have a broad array of offerings and that they're able to help a lot of customers, meeting them and offering help on their healthcare needs. And right now, I would like to play a clip from management talking about this from their latest report.
When we first launched, for people that have been following us, people used to call us the Viagra company, right? We were an ED-only business. And for years and years, that was the headlines, that was the concern, the dependency on Viagra, that category. And then as we progressed and we launched the HERS business and that was getting started, people started to worry, hey, maybe this is a HIMSS-only business. Maybe HERS doesn't have the ability to replicate itself and scale as well. And now that business is, achieving this year, hopefully $1 billion plus in revenue. And I think the reality is HIMSS and HERS has always been and continues to be more than one treatment. When you look at the business today, it's important to remember that the majority of our revenue and profitability is driven by offerings outside of weight loss. And really the amount of patients actually on the compounded GLP-1s is actually quite a small minority of the aggregate subscriber base. And so when referring to pivoting the business to manage the dynamics in the ecosystem, I don't really think that's how we feel about things internally. I think we plan to continue to operate like we always have, which is expanding the offering systematically to patients, broadening the assortment on the platform and the care that we can offer them, deepening our relation with them, deepening our understanding of them, expand into new categories like labs and menopause and low T, work on innovation and R&D for future categories like peptides, which we're working on right now, and ultimately add more value to customers' life in an expanding set of markets.
So they started out, and the narrative around them was that they were just an ED company, and then they were a hair loss company, and then they were a men's company. HERS will never grow, and now we're seeing HERS yielding revenues of more than $1 billion, yet, right? So we're seeing that increasing by double digits. How much do you think HERS will bring in terms of revenue next year? Well, my guess will be that it'll be much more than it is this year. And over the course of 10 years, it'll be a lot more than it is now. And so we will see the company continue to bringing on a lot of more offerings, expanding the access to treatment, democratizing access to healthcare and proactive healthcare at scale. And what is incredible about this is that they just launched these 3 new offerings in this quarter that will just keep on improving and yielding so much value on their platform. Testosterone replacement, menopause, and also labs. So labs is the thing that in my opinion ties it all together. I have this video where I explain my thesis on HIMSS and HERS through labs, saying that they will be able to, through labs, do proactive healthcare for each individual customer, right? And so labs is what ties everything together. And already now they're seeing huge boosts in terms of user retention and in terms of actually boosting health for the users because of labs. So let's hear what Andrew has to say.
70% of people who do a lab test on the Hims & Hers platform identify an area of risk that is treatable on the Hims & Hers platform, right? Most of the time, this is something patients are learning for the first time, that they're pre-diabetic, that they're at risk of cardiovascular disease, et cetera. And so there's a massive flywheel in making the entry point in data collection and learning about your health extremely low and extremely easy to get started, and then ultimately build value over the long term with these patients as we expand our care and can have a more comprehensive look at their health.
And what is incredible about this is their whole idea of doing this and bringing it to more people, democratizing it to a higher degree. I made another video where I said the company lowered the price for labs, and they will continue to do this because they are fully vertically integrated. So no money has to leave the Hims & Hers ecosystem. Everything can stay inside this ecosystem, and that is why they can cut prices more aggressively than their competitors, than other healthcare platforms. Why we're seeing much more value accruing to Hims & Hers as a platform than to other platforms, right? And that is because they're able to share these economies of scale with their users, bringing down the costs over time, democratizing access to proactive healthcare over time, right? And as we'll see the company bringing down prices much more. Let's hear management talking about this.
There's just never been an easier way to collect more advanced data from patients across these things, whether it's wearable devices, whether it's polygenic risk scores that you can do a swab on the inside of your mouth, whether it's cancer testing or it's full gene sequencing. It's just really incredible. And so as that accelerates and our investments in your bio accelerate and we're able to get testing at home for cheaper costs. We'll be verticalizing that infrastructure so that you, as a member of Hims & Hers, can be getting access to this type of data collection on a really frequent basis. I think that intelligence layer to then help understand how we get ahead of what you are struggling with or what you may struggle with in the future is going to be an increasingly important part of the business. And so this is where I think the platform really transitions from focusing on a single treatment to proactive preventative care.
So Andrew Dudum says cheaper costs. This is a wonderful thing for me to hear. I love hearing this. This just speaks into my thesis. And what this does and what labs fundamentally will do is bringing up the ARPU on the platform. As we see here, the repeat customer online revenue is up by a lot. It is just increasing. So customers are spending much more money over time on their platform. And new customers are also spending more money over time on their platform. This creates a very virtuous cycle on improved health outcomes and improved data feedback loops and improved monetization on the platform, which will just bring down those costs over time. As we saw earlier with labs, with more than 70% of people using labs actually finding something that they should be treated for and using it, and it yielding high retention rates. This is what Hims & Hers is about. It's about personalization. I've stated on multiple occasions that Hims & Hers is all about personalization. So this share of their total subscriber mass utilizing a personalized treatment plan going up, so their share of subscribers on a personalized plan will just increase their retention, will just increase their available pool of proprietary data, will just spin this Hims & Hers flywheel that you're seeing on your screen right now, where more data leads to more precise insights, and more precise insights lead to higher and more effective care, and more effective care yielding more users, right? And these users yielding more data, and this just spins this virtuous flywheel of great things for Hims & Hers over the long term. But if you get stuck up in quarterly results, if you get stuck up in their revenues, you will miss this large and long journey of value creation. It's all about if the company is succeeding in terms of executing on where you think they should execute over the long term. Are they prioritizing investing into their platform? Are they prioritizing their users? Or are they prioritizing doing things that makes Wall Street happy over the short term? Wall Street wants profits now. They want margin expansions now. They want to see clear-cut evidence on return on investment capital when when a company does investments and they want to see it now. You as an investor have a huge edge as you're able to see past all this. Are they building a company and are they building a platform that offers a valuable offering for their customers? Are they growing where they need to grow? And as I just showed you, they're growing in terms of their share of customers on a personalized plan. They're growing on subscribers. They're growing on revenues. They are increasing the offerings on their platform. Only thing that isn't growing is just the headaches that come with watching and following a company maniacally quarter over quarter, thinking that, oh, if Hims and Hers in this quarter doesn't deliver high revenue growth, it's over for them. It'll be over for Hims and Hers the moment that they stop investing into their future. It will be over for Hims and Hers the moment that they stop building a platform for the future. It'll be over for Hims and Hers when they stop lowering prices and access to healthcare at scale. But until then, there's a lot of value to be made, right? There's a lot of value to be extracted and created. And you, as an investor, will miss out on this value creation if you get stuck up in these things in the short term. I just showed you all these things from Hims and Hers and why I think that they're pointing in a very virtuous direction. Hims and Hers is likely going to be continued to be misunderstood, and this is your edge. Understand the company. Do you understand the company? Do you understand what they are? Understand the direction that the company is supposed to move in. View reports as directional pointers, not as the end-all be-all of the company's long-time success. I refuse to believe that if we see a deterioration in Hims and Hers as a company, it'll be because of something they do in Q2 of 2027 or something. It'll be a long time, just a steady decline in terms of fundamentals over a long time, and we'll have to see management making a series of terrible decisions. For now, they've made so many virtuous and well thought out investments and decisions, right? Are they seizing the opportunity that they're supposed to be seizing? Are they creating value? If so, you have nothing to worry about. And that's why I'm not worried about Hims and Hers. So thank you for watching my video. I appreciate your time, and I'll see you in the next one. Bye.